All right, Bankless Nation, I am here with Brandon Iles of Ampleforth. Brandon, do you want to give a quick hello and explain what you do at Ampleforth?
Yeah, so thanks for inviting me. Happy to be here. I guess quick background, let's see, one of the original creators of the project, along with my partner, fellow co-founder, Evan Quill.
Mm-hmm.
Quick history of where I came from. I come from a very hard computer science background, so CS at school. Worked at NLP research lab after that, Google search and machine intelligence for a few years. Really interested in crypto from the beginning, around 2009-ish. Co-wrote one of the first Android Bitcoin wallet applications that got released into the Google Play Store back in 2011. So I've been interested in the space for a long time, but sort of sat on the sidelines for a long time because there's so much interesting stuff going on in machine learning. And then eventually, just through conversations with Evan, got really interested back in crypto. We started thinking about, okay, what can we do in this area that's actually interesting, where we could potentially learn something that we didn't know before. So that eventually led to, Ampleforth, which I think we're going to be talking a lot about today.
Yeah. So what was kind of the original motivation for building out Ampleforth? Like, why, of all the massive array of potential options that you could start to work on in the space, how did you guys land on Ampleforth?
Sure. So it was sort of a meandering path, I think, for both of us. We each had our own kind of routes to end up where we were. One of my first takeaways when I saw Bitcoin was that, the sort of fixed supply nature of it always seemed like not the best quality. It seemed, at least from an outsider, like maybe a step backwards, sort of regressive to go back to the gold standard that we explicitly moved away from. But given that, I only had like 100 level classes in economics in college, I didn't go much deeper than that. And then sort of forgot about Bitcoin for a while. But then when Ethereum came along, Ethereum kind of promised to be a sort of decentralized computer, right? And then I saw a lot of the activity get really a lot of excitement around the 2017 era, when so many projects were launching. Me and Evan, we were both looking at this from the outside and we're trying to figure out, okay, what's going on? There's a lot of excitement, what's happening? And we were just trying to figure out, okay, why does any of this make sense? Why should any of these utility tokens, type things exist to begin with? And so it just led to a very long series of questions and conversations with, people we knew in the space and outside the space to try and figure out, okay, so there's a new sort of tool set here that we can sort of build something potentially new, right? What are the biggest problems needing to be solved? And we came to the conclusion that, most problems that people were trying to solve with blockchains probably didn't need a blockchain to begin with. And we thought like the most salient application of blockchain technology was to create monetary assets. So we thought, okay, how can we solve sort of the biggest problems of monetary assets? What would be something new that could sort of add to, what's already out there? And, trying to create a monetary asset with, some sort of marginal value means that you need to create something that's different. So like, what problem are we going to solve, right? And we found that the most fundamental problem is really just the problem of fixed supply assets. What's trying to create, the better Bitcoin is sort of like trying to solve the problems with gold, right? The problems with these sort of fixed supply assets is that it's not able to respond to the needs of the marketplace around it. And so that was sort of the central idea that we were trying to pursue when we created the project.
Okay, so let's get into what Ampleforth actually is. And so the way that me and Ryan have been pitching it in our ad reads, because disclaimer, Ampleforth is a sponsor of the Bankless podcast. You guys can see the logo probably right here. So what actually is it? We've been describing it as like a monetary experiment, like an M0 monetary experiment where it's not Bitcoin. It's not just this hard fixed number of tokens. It does something else, but it fulfills that same niche where it's supposed to be a monetary good, right? How would you describe Ampleforth in your words?
Yeah, so I'd say that, Ample is a base money digital currency with an elastic supply. That responds to the needs of the marketplace, right? It's also completely rules-based, encoded in a set of rules on smart contracts on Ethereum today. And the high-level view of how it works is when the price of the Ample token is above the target price or the reference price, then it means it needs to increase the number of AMPL in circulation. And when the price of AMPL is below the target price in the marketplace, it needs to reduce the supply of AMPL in circulation. And the way it does that is fairly unique in the sense that everyone on the platform has equal standing, right? So when new AMPL tokens get created, it goes out to everyone on the network proportional to what they hold. And then also when tokens come out of circulation, it comes from everyone on the network proportional to what they hold. So this does is it sort of incorporates price into supply, which we've never really seen before, right? And it also creates a different set of underlying incentives for people in the marketplace that we think will also lead to, through emergent behavior, a different movement pattern in the marketplace, which itself is its own, form of value, right? So if you look at, Bitcoin today, if you buy Bitcoin today, it's like you're buying an option on digital gold, right? It might become gold at some point in the future. It might not. But in the meantime, it's also very useful just as an asset because it moves differently in the marketplace compared to equities, commodities, bonds, that sort of thing, right? So it's sort of outside the typical cycle of production and consumption. Right? So AMPL is sort of aiming to be a sort of new, unique monetary asset that has monetary qualities separate from Bitcoin. It might turn into, in the very long term, some sort of alternative to central bank money. But at least in the medium term, like before we get there, we expect that it will move differently, which does add value as a sort of unique building block, not just in DeFi, but just the surrounding financial infrastructure.
Okay, so in my mind, there's a lot of overlap between like kind of what is rooted at the core of Bitcoin and what is at the core of Ampleforth. The biggest one is being a non-dilutive monetary asset, right? So when you buy 1% of the Ampleforth tokens, you are guaranteed to have the same percentage of the total supply of Ampleforth tokens, but you are offered no guarantees as to what number of tokens that Ampleforth network will be. Because where Bitcoin has done a hard cap on supply, you guys have totally removed that hard cap, but made that and put that elasticity or in elasticity into the price. And so any demand for Bitcoin, because there is no elasticity in supply, immediately is reflected in the price. Ampleforth is the opposite, where it makes price inelastic. It makes price very hard to meaningfully move away from $1, and it instead puts that volatility into the supply of the tokens. However, at the core of it, the values of Ampleforth are similar in the sense that it's non-dilutive. That's all correct, right?
Exactly. Yeah. So with AMPL, you see a combination of two different qualities that we've never really seen before together. So one is it's non-dilutive, the same way that Bitcoin is. But two is it also has a long-run equilibrium unit of account that unlocks certain use cases like denomination, right? So for just like you said, a change in demand for Bitcoin changes the value of Bitcoin and also changes the prices of things denominated with Bitcoin, right? So with AMPL, increase in demand or decrease in demand results in a change in supply, right? But it still allows you to denominate like goods, services, contracts through time, and debt, most notably, right? So for example, say you and I got into a contract saying that I'll borrow 1 BTC from you for a year. A year goes by, the value of BTC maybe doubled, right? So suddenly I'm on the hook for way more than I thought I'd be. So that would lead to a default or liquidation that itself could lead to cascading defaults or liquidations, right? So, AMPL still has a unit you can denominate debt with. So if I were to borrow, say 100 AMPL, it borrows a lot like a stablecoin, right? So if I borrow 100 AMPL to pay back, a year from now, I know that I'm going to be paying back 100, 2019 US dollars worth of purchasing power, right? So that leads to, a much more robust financial system that we can build on top of this base asset that wouldn't be possible with something like just gold or BTC.
Okay, so that's what meaningfully separates it from just being an ERC20 token that is just minted with a cap supply, right? It's the actual function and what should be the valuation of AMPL at large really is what is what you can extract out of the rebasing mechanism, right? That is the main differentiator between AMPL and just a normal ERC20 token that has a fixed supply. In my mind, the way to evaluate the AMPL currency is to what degree that the ecosystem around the AMPL token can actually leverage the rebasing mechanism, the repricing mechanism. Is that right?
I'd say there are two aspects there. So one is there is different behavior of AMPL, which unlocks different use cases around DeFi that we can get into details later, because I know your listenership is very deep and well versed in the DeFi ecosystem. But even before we get there, if you read our white paper, we do formulate it in terms of an experiment, right? So just reading the abstract, there is a testable hypothesis where Bitcoin will AMPL will pass its test if it succeeds in moving differently than Bitcoin, right? If all we do is create something that moves identically to Bitcoin, if all we do is create a Litecoin, then that's a negative outcome, right? So what we did is we made the smallest, economically interesting change that allows us to learn something new about economics and monetary theory that we didn't know before.
Right. Very cool. So you're looking to be uncorrelated from Bitcoin, which is itself generally uncorrelated also from the rest of the world. Is that right?
Yeah, because if we end up being perfectly correlated, then it means that we created no extra value.
Yeah. What did we do? Right.
Right.
Cool. Okay. So a couple components of what makes Ampleforth tick. There must be an oracle, right? Can you talk about that?
Sure. Yeah, there's three main components to the system. There's the oracle, the monetary policy that reads data from the oracle and then makes decisions about how to adjust the supply. Then there's the token contract itself. So the token contract is fairly simple. It's an ERC20 on Ethereum. Monetary policy encodes the rule sets about how to read in the oracle values about market data and CPI information, and then modify the token itself. And then the oracle we have is also a very important part and also sort of very much related to the degree of decentralization that we're able to achieve just from its base infrastructure. Right now we're integrated with Chainlink, and then we also run input ourselves. And then this is something that is right now in practice fairly similar to the highest level where everything comes together, fairly similar to Maker's whitelisted immunizer type approach, which we think is a very safe form of oracle today. And that might evolve over time as more oracle infrastructures are sort of built and proven out. Those are the three main components. Right now we're deployed on top of Ethereum, but we view ourselves as being blockchain agnostic, right? So from the very early stages of the project, we made the decision to not build our own blockchain, which was fairly controversial at the time because back then it may be still the case now. It's a lot of people perceive it to be the case that you're not a real project unless you're building your own blockchain, right? But we would rather be, where everyone else already is, right? We don't want to create our own silo and then make everyone come to us. We would rather be where everyone is already storing value or making transactions, right? And so we're seeing a lot of the benefits of the emergent behavior of how all these applications fit together, in the DeFi world right now. And so I think that was definitely the right move. And then, in the future, we can also have Ampleforth exist on multiple blockchains simultaneously. So even though, the monetary policy and the oracle get deployed and exist in one location, if the policy from Ethereum can also modify the token contract on, say, Polkadot, the same way that it modifies the token contract on Ethereum, and then as long as you can also transact from an Ethereum wallet to a Polkadot wallet, then it's essentially the same currency because it shares the same liquidity pool. Right? So we view Ample as being, long-term, sort of independent of any blockchain platform and sort of cross-blockchain asset.
But you would always need Ethereum because that's where the oracle and rebasing infrastructure lies, right? So Ethereum couldn't die and have Ampleforth live on a different chain. Is that correct?
Yeah. So if Ethereum were to have some sort of catastrophic incident, then Ample would need to have the same rule set deployed in some other location.
Okay.
Right. Yeah.
Right. Cool. Okay. So when the Ampleforth token is above $1, which it's been a lot lately, and so then the rebase happens, and so people will find that they magically own more Ample tokens at a lesser valuation. How does the rebasing mechanism actually decide how much to reprice the Ample token? Because it doesn't rebase it all the way back down to $1, it does something in the middle, right? So how does it decide to what the target is for the 24-hour rebase?
Sure. Yeah. So the first thing I want to make sure everyone understands that the system is completely symmetric, right? So it's easy, given the situation right now that we've seen a large influx of new people in our community, a lot of new interests that we didn't really have before, and it came very quickly, maybe faster than we were, really ready to handle. But the system can both expand and contract depending on whether the market price is above or below the reference price. Right. So the rules of the system are actually very simple. You write it down on the back of a napkin. We think that that's one of the great qualities of the system, right? So it's very transparent. It's very easy to understand. It's very easy to predict. So the equation is actually very simple. So if the 24-hour volume weighted average price of AMPL is within 5% of the reference price, then it's considered to be in equilibrium, and then no changes happen, right? If it's more than 5% over the reference price, then it goes into an expansionary state. More tokens get created and distributed to wallet holders. And when it's below 5% from the reference price, then it contracts. And then, so there's two hyperparameters to the system. One is that equilibrium threshold, the 5% band. The other one is a smoothing factor, right? So basically a dampening impact, right? That keeps it from over responding, right? So sometimes people ask us, okay, you do a rebase every day. Wouldn't it be more efficient if you did it every hour or minute or every second, right? And why do you only go 10% of the way? Why don't you just go all the way, right? So in some sort of hypothetical world of perfectly efficient markets, that might be the right move. But given that the world doesn't have efficient markets and there's different players with different VCs, and it takes a while for a market to reach some sort of consensus, we didn't want to overreact. So as long as we have the incentives pointing the right direction, right? If it's directionally consistent, then it will eventually lead back to the equilibrium zone, right? So the purpose of the 5% band is to absorb the normal sort of market randomness, right? So ideally, the supply only changes in response to a structural change of underlying demand. So when it gets more than 5% away, then we're probably at that point. And so when you're in a dynamic state, the market is essentially everyone's competing to figure out what the next supportable supply level is, right? So most assets go through a process of price discovery. AMPL goes through a process of what we call like supply discovery. So everyone is sort of trying to compete about who can guess what the next equilibrium supply or market cap is. And then if you're correct, there is a sort of arbitrage opportunity where, as an agent in the marketplace, you can get some value that also helps the system go back into the equilibrium zone.
Okay, so it uses a bunch of different people's opinions as to what they think the aggregate market cap of Ampleforth should be, and then people will execute on those decisions, and the correct ones get rewarded, and the less correct ones get rewarded less.
So the protocol can control supply, but it can't control price, right? If we could just will the price to be $1, then problem solved.
Yeah, right.
There's nothing else to be done. So the protocol can impact price, or it can impact supply, but it's the market that incorporates the change in supply back into the change in price.
So do you see the biggest use cases for the AMPL token to be collateral inside of DeFi applications? Because like when it comes to transacting or like paying my buddy back for beer, AMPL doesn't really seem to be the right choice because, it's like you, in the same way you don't use Bitcoin to pay people back for beer, you also wouldn't use AMPL. But when it comes to paying back debts, that seems to make a lot more sense because for like how we discussed earlier, I'm much more willing to pay back 100 AMPLs in 1 year's time because I know it's generally going to be a dollar plus or minus, some mean like not too wide margin. What other DeFi use cases could you see AMPL fulfilling in the future?
Right. Yeah. So maybe there's one day in the future where people use crypto to buy stuff. We think that's going to be the final use case. That's only going to happen after everything else is built out and sort of proves itself. Right. So until we get there, as you said, a collateral asset that moves differently or uniquely, I think is very important. Right. So if you look at the space of digital assets today, everything is very highly correlated, right? Especially when you're looking at pure monetary assets, everything pretty much follows Bitcoin, right? If Bitcoin goes up and some other monetary asset hasn't gone up, then I would probably bet on that going up, the same way. That's how most traders operate, because historically that's been the case. And because they all move to the same rules, it's probably going to stay that way for a long time, right? So it makes the process of trying to build a portfolio of collateral assets difficult, because if you're trying to build a basket of goods that reduces your volatility, then you want, a small set of goods that are as different from each other as possible. As, the less correlation, the better, right? So there's two ways of dealing with risk. One is through hedging, which is very complicated, difficult to price. There are whole textbooks about how to price options, for example. Then there's diversification. So a lot of the utility from Ample in the early days, we think, as long as it's able to fulfill, our hopes for it, will be as a way of providing diversification into baskets of collateral that you could use on decentralized banks or lending platforms. There's lots of use cases there. So I think that's the most likely near-term use case. Long-term, we can use it, or medium-term, we can use it to denominate debt, contracts. We can build up sort of decentralized infrastructure on top of more robust underpinnings that can allow things like denominating debt in a safe way, right? With a purely decentralized asset as much as possible that's also simple and rules-based and easy to understand, right? So I think there's because so many builders in the space come from a computer science builder mentality. I include myself in that group. We love building things. We love building things that are sort of complex structures and towers. It's where we build off of everything around it. But in a financial ecosystem, it's not necessarily a good thing, right? So the higher your stack, the risk you get grows non-linearly, right? So simplicity is like a huge feature that I think is undervalued, right? So I think that's also really important to have, especially the lower level, the lower you go in the stack, the simpler the mechanism should be. And then, much later on, maybe it could become an alternative to central bank money where you buy your morning coffee. But, that's, who knows when that's going to be. Like, if you look at the activity of people in DeFi right now, like spending crypto is the last thing on their mind. People want to hold crypto. If they're not holding it, they want to lend it out to get interest. If they're not lending it out, then they're borrowing to go turn around and buy more crypto, right? So people aren't necessarily looking to buy yet, but maybe at some point, we will have succeeded if we can get there, but it'll be a while. And then, there's some interesting interactions between Ample and its mechanics and other platforms in the DeFi space, right? So I think two really interesting examples to look at is a lending platform and then an AMM, like automated market maker DEX, right? So if we start with the lending platform, so one is, if it is the case that Ample does succeed in moving differently in the marketplace, then it makes it a very attractive collateral asset. So even if it, as an individual user on, say, Compound or AAVE, right? If you could use only ETH or a combination of both ETH and some other asset that's uncorrelated, not necessarily counter-correlated, but just moves differently, a different signal, then that means you have a safer basket of collateral to borrow against.
Right.
So as a lender or a borrower, it's nice to use that as collateral. And then if you look at the borrow activity on lending platforms, almost all of the borrow activity is for stable coins for very good reason, right? That we talked about earlier, right? So, this is sort of different now because the incentives in play have sort of distorted the activity on lending around, like people are farming comp and BAL and that sort of thing. And so they're changing around their portfolios in different ways. But before all that happened, people were pretty much only borrowing stable coins because they knew exactly how much they were going to have to repay in the future. Mm-hmm. Right? So Ample is a decentralized asset like BTC or ETH or something like that. But it borrows like a stable coin, right? So if I borrow 10 Ample, I know I'm going to pay back 10 Ample plus interest. Mm-hmm. I know that every contract that comes down the line from that is not going to be exposed to the volatility risk, because no matter what happens to the supply of Ample, the amount of Ample I borrow is going to remain the same, right? So I think that's really interesting, specific use case in DeFi. There's a second really interesting use around DEXs, right? So I'm sure your audience is very familiar with, for example, Uniswap, right? Which is a very simple model of an automated market maker, where the price is quoted based off of the relative size of two pools. AMMs were created to solve the liquidity problem on the long tail of tokens, right? But as a liquidity provider, you're exposed to what's called impermanent loss. So as the relative prices of the two assets in your pools diverge, the process of arbitrage can extract value from those pools, and you as the liquidity provider can actually see losses, even though you're getting fees from trades, right? And this is especially the case with the longer down the tail you get, the more exposure you might get to impermanent loss.
Low volume pairs really get hammered by impermanent loss, right?
Exactly, yeah. So this is a fundamental problem in DeFi that we would like to have a solution to, right? So AMPL actually has a very interesting potential use case in this realm because of it all stems from the way we move volatility from price to supply, and also because that change happens in a predefined point in time, right? So there's a really great project out there called Balancer, for example. They're doing sort of hybrid. It's like a generalized Uniswap where you can have up to 8 assets in a pool, and you can add different weights according to each asset. So if you imagine, a balancer pool, right? So even though AMPL is a floating price token, floating value token, right? It could go up by 10 times or down by 10 times, right? We wouldn't want to trade against a stable coin because the stable coin remains fixed, but the value of AMPL can go up and down, which exposes LPs to impermanent loss, right? But when we move the volatility from price to supply, at the same time, we can adjust the weights in the balancer pool by the same factor. So what we end up with is a pool where you can trade a floating price token, AMPL, against a stable coin, but as an LP, you're exposed to no impermanent loss, zero impermanent loss, right? So this also makes AMPL a really compelling base trading pair token on AMMs because you can simultaneously provide liquidity to a stable coin with no impermanent loss and some other floating price asset like ETH or WPTC, or you can choose your favorite one, and it has the same behavior that you expect in a pair of two floating price assets.
So there's been a conversation going around in the Ethereum space about stable coins and how difficult they are to make them pure, right? So single collateral DAI was our one pure form of totally bankless, totally trustless stability, except even that had trust baked into the Oracle. And I guess Ampleforth hasn't necessarily solved the Oracle problem either. It just has an Oracle, but it also does solve the problem of what a lot of people are concerned about with USDC backing DAI, and my company Realty, we're trying to get real tokens into Maker DAOs to mint DAI, but then that's based off of real estate, which is inside of the United States of America, which also is trusted. And so actually the first Meet the Nation that we had Rye on, which also provided pure stability. It was stable-ish in the same way Ampleforth is. And so what I'm fascinated by is Ampleforth's ability to offer stability, not necessarily to the holders, but to the debtors, offer stability to them in a very pure and trustless and bankless way, because everything is built directly into Ethereum, into the base layer. And I think that's just fascinating.
Exactly. And yeah, we do have an Oracle that takes data from outside the blockchain, but we do have a potential path where we could end up with kind of sidestepping the Oracle problem if all the data we need exists on the blockchain, right? So if we have enough trading activity, enough liquidity that happens on the blockchain itself, then we no longer have to go outside the bounds of the chain to get that information. So there is a potential future where we can be completely, decentralized, right?
Right. So, and Ampleforth has the most liquid Uniswap market there is. Is that correct?
Yeah. So we're the number one pool on Uniswap V2. Last I checked, we had around $27 million of assets in the pools. Yeah, so I think that's a result of our latest application that we launched about 3 weeks ago that we called the geyser.
Yeah, tell us about that.
Sure, definitely. So the geyser is, in short, just a liquidity incentive program and distribution mechanism, right? So there's sort of two pieces here that we were hoping for. So one is we wanted a fair, sensible way, for some definition of the sensible way of distributing tokens from the ecosystem fund out into the world that's rules based and open participation, right? So in the early days of Bitcoin, anyone could run a miner on their desktop and sort of get Coinbase rewards. So nowadays it's sort of consolidated. It's a little bit different picture, but that was the ideal that Bitcoin is going for. So Ample, since we're not tied to an underlying layer one, so the best way you can perform work that increases the health of the ecosystem is by providing liquidity, right? So our version of mining is providing liquidity on
Can't fake liquidity.
Exactly. Yeah. So, so like monetary assets are defined by their scarcity and their use value, and their efficiency is measured in their liquidity, right? So the primary thing we're going for was to, one, distribute tokens fairly, and two, in a way that increases liquidity of the platform. So that's what the geyser is. So, very simply, if you provide liquidity onto Uniswap and then take those tokens and deposit it into the geyser, the more liquidity you provide and for longer, the greater share of the ample drip you receive. Right. So yeah, it's been very successful, beyond any of our expectations. And I think the reason why is because it created a defined point in time where everyone could come look at the project at the same time and also see other people looking at the project at the same time. Right.
Mm-hmm.
It gave people the confidence to sort of participate, right? So like money is a shared understanding of value. So if enough people can reach a critical mass at the same time, I think that's what started a lot of these sort of the sort of kindling that created the behavior we saw over the last few weeks. Mm-hmm. So I think people initially came by seeing the geyser, especially since everyone's sort of in the mindset of yield farming, that sort of thing. But I think people saw the project and then stayed for the project. So I think that's why I'm so excited about what's happened in the past few weeks, is that a lot of people aren't even necessarily participating in the geyser, but they are participating in Ampleforth, the project, right? Mm-hmm. So I think that's exactly the sort of outcome we were looking for.
Yeah, I mean, I can definitely say that I've been captured by the Ampleforth project based off of our very initial conversation where we were talking to you guys about becoming a Bankless sponsor. So very much thank you for being a Bankless sponsor. And the final question I have for you guys is, so with any money, it needs to be distributed equitably, right? And that's the target of the geyser program. So I kind of want to just go through the other big supplies of Ampleforth tokens and who owns them and what they're going to be used for. So on EtherScan, you can see that the Ampleforth treasury has 20%. The Ampleforth employee and advisor pool has 18%. And then the ecosystem fund has 8.5%. Is all of that going to the liquidity geyser? All that 8.5%? Or
yeah. So first of all, great question. So this is something that we do care a lot about being transparent about. Mm-hmm. So before we launched, we published a transparency report that published all the numbers that you just said, right? So we want to be completely open about that. All the wallet addresses are also labeled on EtherScan, so they're easily viewable. I think the real way to approach this issue is one of funding, right? And how can we create a sort of framework that will allow the project to reach what it's capable of, right? So this includes being able to support ongoing development, support people like you who sort of do deep dives, ask the hard questions, and sort of educate the broader group of people. And so because Ample is non-dilutive, we can't just mint a bunch of tokens and then sell them to fund ourselves, right? And it's also the case that the protocol itself is non-extractive, right? So we don't extract any seigniorage, we don't add any demurrage or add any transaction fees, right? So there's no ongoing revenue model. So we did have to think about the long-term health of how can we actually support the team that builds the project that provides what Ample is, right? So we did go with that sort of initial breakdown because there weren't too many options we could do, right? So because we had to do that so early in the project, also we had to be very conservative about the breakdown and how we define those buckets. So we blocked those out. That's a way of saying that, hey, this chunk of the network, we can use up to this amount, but we can't go over, right? It might be the case that we're able to reach orbit with a small team of under 10 people, and we don't need those funds anymore. At that point, we can revisit that, add them into the geyser, find some way of distributing them. But at least we have the ability to capitalize ourselves to build a project if we need to.
And Ampleforth has been a project for many, many years, correct? When did Ampleforth actually come about?
So I'd say the earliest conversations between me and Evan was late summer 2017, right? This is actually the second iteration of the project. So before it was called Ampleforth, it was called Fragments. And so some people might know us by that name. It was a very large, complex system, much closer to a bank, whereas now we're much closer to a natural resource. And so it had like a reserve and it had bonds. And so it had like balance sheets and assets and liabilities and that sort of thing. We became very, we lost a lot of confidence the more we worked with it. We just kind of felt that, okay, this may or may not work. It might just break, right? So if we have a system that relies on bonds and we're selling these bonds and, profit motivated actors aren't willing to buy them to bail us out, then that's sort of the end of the platform, right? So we said, okay, what happens if we take out bonds? What happens if we just strip this down to the most primal essence, right? And that's sort of how we ended up with Ampleforth. So we officially launched, February of 2018. That's when we started development and started hiring on the team. We launched last year. So we launched on the Bitfinex launch platform June of last year. So we've been around, live, operating according to the rules and technology in place for just over a year now. But it's really the last few weeks that we've seen so much, excitement and attention.
So that biggest wallet, the 20% of the total supply labeled the Ampleforth treasury, is that for company development?
Exactly. Yeah. So we have a description of what those buckets are for, like in that report. Mm-hmm. Mm-hmm. And we also have listed the unlock schedules. So those are still like, we can't even access those because they're still not even reached its unlock, this first unlock, right? So when we get to that point, then we'll be able to use those to capitalize, funding the team and that sort of thing.
Right. Okay. And that ultimately just is supposed to, like, you're supposed to sell those Ampleforth tokens into the market so you can raise money, so you can pay for things to just promote the Ampleforth system, right? Because it ultimately goes towards the team, and the team is dedicated towards building out the Ampleforth system. If that's wrong, let me know. If that's right, what is in the roadmap over the next 1 to 3 to 5 years for Ampleforth? Like, what are you guys working on to promote Ampleforth?
Right. Yeah. So our first goals right now. So there's two ways to look at it. So one is we want to help build out this decentralized financial ecosystem as much as possible, which means hopefully integration with as many different projects as we can. Right. So those are sort of difficult to sort of predict because it involves outside parties that sort of have their own development timeline and that sort of thing. So we hope to sort of help build up the ecosystem as much as we can as we're able to. Separate to that, we just from a technology perspective, we want to continue to decentralize the Oracle, right? And then we also want to kind of realize this vision of a multi-blockchain asset too. So launching on top of different ecosystems, for example, Polkadot or maybe Cosmos or something similar like that, to sort of show that we can have a robust cross-blockchain asset. So that's as much as we've published so far. Those are big ones, right? And those are, I guess the last one is decentralizing governance too, right? Mm-hmm. So that's something that doesn't have a clear endpoint, right? It's not even clear what that means. And so that's going to be a long process over many years, also involving the community.
Fantastic. Brandon, if you had a message for our listeners, where should they go to find out more about Ampleforth? What would you like them to hear? What do you want them to do?
So definitely check out our website, ampleforth.org. We have a lot of resources there to go read and do deep dives. Now we also have something called the Red Book that sort of puts Ampleforth in a broader economic landscape or context. Also talking about macroeconomics and why crypto is just maybe interesting at all to begin with. Also, welcome to join our community. We're going to start up a Discord fairly soon, so look forward to that. And then we also have a fairly vibrant Telegram community and Twitter as well.
Cool. Awesome. Thanks, Brandon, for coming to Meet the Nation.
Thanks so much for inviting me. Happy to talk about what we're working on.
Cheers.